Okay, so you know how usually when the stock market takes a dip, everyone runs to the dollar. Safe haven, right? Well, lately, something's been feeling a bit off. Stocks are down, but the dollar isn't exactly rallying like it normally does. It's actually weakening, which is kind of a head scratcher.
Yeah, it's definitely unusual. It's not what we typically expect. So we're going to unpack that today. We're going to take a deep dive into why this is happening. There's some really interesting recent analysis highlighting some big shifts that might be causing the dollar to lose some of its, well, its safe haven appeal, even as the stock market
So
wobbles.
this isn't just like a blip, right? This is something worth paying attention to.
Right, exactly. This isn't just a random fluctuation. This is a trend that has some analysts concerned, and we want to understand why. So, our mission today, I guess you could say, is to figure out what are the main forces driving this kind of unexpected weakness in the dollar, and also what could it mean, for investors, for the global economy, even for you and me, frankly.
Okay, so to start us off, let's just recap that usual relationship we see between the dollar and the stock market, just to make sure everyone's on the same page. So typically when stocks go down, the dollar strengthens, right?
Right. The dollar usually becomes the go-to safe haven asset. Investors pull out of riskier assets, like stocks, and park their money in something seen as more stable, like U.S. Treasury bonds, and that pushes up the demand for the dollar. So yeah, dollar up, stocks down, that's the classic pattern.
Exactly. That's what we're used to seeing. But right now, it seems like that script has been flipped. And one of the big things people are pointing to is, well, it's President Trump's policies, right?
Yeah, absolutely. A lot of the analysis we've been looking at is pointing to the impact of Trump's policies, specifically his tariffs and his kind of general shift away from globalization, from those traditional trade relationships. These moves, they seem to be spooking some investors. They're making them question the dollar's long-term stability.
So it's all about confidence, right?
Okay.
If people don't feel confident in the future, they're less likely to hold on to that currency.
Exactly. It's all about perceived stability and predictability. When you introduce uncertainty into the global economic picture, like, maybe these trade wars or these big policy shifts, well, that can erode confidence in the dollar.
Okay, so we've got this uncertainty. It's affecting how investors feel about the dollar.
Yeah.
But are we seeing this reflected in actual market movements, like real numbers?
Oh, yeah, absolutely. This isn't just theoretical. If you look at the Bloomberg Dollar Index, that's the one that tracks the dollar against a basket of other major currencies. It's actually dropped by almost 3% over just the last 3 months. And that's the worst start to a year for the dollar since all the way back in 2017.
Wow, that's significant. And so where's all that money going? If it's not going into the dollar, where are investors putting it?
Well, it's interesting. We're seeing a pretty clear shift towards traditional safe havens, things like gold. Gold has just been skyrocketing. It hit a record high recently, went above $3,000 an ounce. We're also seeing a lot of interest in the Japanese yen, which is another classic safe haven currency. And then, kind of surprisingly, there's actually growing interest in European stocks as well. So investors are looking for alternatives. They're diversifying away from the dollar.
So are we saying then that some investors are basically betting against the dollar? I mean, is that too strong a way to put it?
Well, I wouldn't say they're betting against it per se, but they're definitely becoming more cautious, more hesitant. There's a growing segment of the market that's worried about the potential for a US recession, and that's fueled in part by concerns about, Trump's economic policies. And that kind of concern that can lead to investors reducing their exposure to the dollar, hedging their bets, so to speak.
That makes sense. But I guess I keep thinking the dollar has been the world's dominant currency for so long. I mean, it feels almost unshakable. Does something like this, these recent shifts, can they really challenge its position like that quickly?
Yeah, that's a really good point. It's important to remember that the dollar still has some pretty major strengths, some underlying factors that make it, resilient. The US economy, even with the recent slowdown, it's still massive, it's diversified, it's innovative. And then interest rates in the US, they've been higher than in a lot of other developed countries, which makes the dollar attractive to investors seeking returns. And then, of course, there's the fact that the dollar is still the world's primary reserve currency, the main currency used for international transactions, for oil trades, for example. So, all that to say, yeah, currencies don't lose their top dog status overnight. I mean, look, the transition from the British pound to the dollar, that took decades. And experts, people like Carmen Reinhart, they keep reminding us of that. It's a slow process.
Okay, so the dollar's got some staying power. But what about other countries? Are they watching all of this unfold, seeing this uncertainty and maybe thinking, hey, maybe it's time to look for some alternatives?
Yeah, that's exactly what's happening. I mean, President Trump's policies are unintentionally kind of giving other countries a nudge, prompting them to think about maybe reducing their reliance on the dollar. Europe, for instance, they see an opportunity to promote the euro as a rival reserve currency. And then you've got some developing countries that are exploring alternative systems for trade and for holding their reserves, just in case. So, yeah, there's definitely a sense that things are shifting, that the global landscape is becoming more multipolar, more diversified.
And so what about Trump himself? I mean, where does he stand on all of this? He seems to want the dollar to stay strong, but then he also talks about wanting a weaker dollar to boost exports. It feels a bit contradictory, doesn't it?
Yeah, it is a bit of a mixed message. Publicly, Trump has said that he wants the dollar to remain the world's dominant currency. He's even warned other countries against trying to create alternatives. But then at the same time, he has hinted at wanting a weaker dollar to make U.S. exports more competitive, which, can be a bit confusing for the markets.
Okay, so let's talk about tariffs a bit more.
Yeah.
Because, I mean, normally tariffs actually make a currency stronger, right? They reduce imports, which can boost demand for the domestic currency. But it seems like in this case, tariffs are actually part of what's weakening the dollar.
That's right. Usually, yeah, you're right. Tariffs tend to strengthen a currency. But the thing is, the tariffs that Trump has imposed, these are, well, he calls them huge hikes. And that's not an exaggeration. These are pretty unprecedented. And that scale, it's raising fears about inflation, about potential retaliation from other countries, and about slower economic growth in the long run. And those concerns, those fears, they can outweigh that typical strengthening effect that tariffs usually have. And the administration's argument is, well, this is short-term pain for long-term gain.
Mm.
They're saying that these tariffs are necessary to protect American jobs and to rebalance trade deals.
Okay, so it's a gamble. Short-term pain for hopefully long-term gain. And speaking of pain, I mean, how is Wall Street reacting to all of this uncertainty?
It's definitely a cautious mood on Wall Street. You can see it in the numbers. The S&P 500, it's dropped by, well, it's pretty significant, about 9% since mid-February. And a lot of analysts are attributing that, at least in part, to concerns about, the economic fallout from these trade wars, from these policies. And then there's also just a general feeling that maybe the tech sector in particular had gotten a little overvalued, so there might be some correction happening there as well.
So we've got U.S. stocks down, the dollar down, a lot of uncertainty swirling around. But is the picture the same everywhere? What about other markets?
Well, that's where it gets even more interesting, because while the U.S. market has been struggling, we've actually seen pretty strong gains in European markets, particularly in Germany. A lot of this is being attributed to Germany's decision to increase defense spending. That's seen as a sign of economic confidence, and it's potentially drawing investment away from the U.S. So you've got this kind of diverging picture, which is, well, it's just adding another layer of complexity to the whole situation.
Okay, so just to bring it all back together, it sounds like the dollar's not behaving like it normally does during a stock market downturn. And a big part of that seems to be shifting global confidence, and a lot of that seems tied to, well, to policy changes, to those tariffs, to that general move away from globalization.
Yeah, that's a really good summary. It's really at the heart of what we're seeing.
So for you, the listener, as all of this continues to unfold, as these shifts continue, the big question to ask yourself is, what are the key things that you should be watching, to really understand where the global financial landscape and the dollar's place in it, where that might be headed?